So you're looking for a maximum funding. In this video, I'm going to identify some of the ways that you can get absolutely amazing quantities of funding. But before we get started, let me start you off with some statistics. Over the last year, personal loans from financial institutions and creditors have increased over 10%. US citizens are carrying an average balance of $16,000 in debt. And of those, 15% have an average of $30,000. So when jobs are coming up and this is happening and there's an all-time high of opportunities, why are still people needing the infusion of cash? So it could be for many emergencies, it could be for personal reasons, whatever the case. In this video, I'm going to show you a step-by-step process to verify how much you can get and why you should be paying attention to some of these metrics. Now, before we get started, I'd like to remind everybody, if you're new to this channel, don't forget to subscribe and turn that bell icon on. So every time there's a new video like this with informative financial education and content that you can benefit from, you'll be first to be notified. So we need to understand first why you might need the infusion of cash. Biggest thing to do when it comes to that is identify how much you need and if you can comfortably afford that. Just because you're eligible for a lot of funds doesn't necessarily mean that it's easy to use. Even the best of us can have issues with this, right? For instance, sometimes we feel that the credit is just there, it's available. If we just tap into it, we can pay it off at a later date. And then what happens is, as we carry that financial burden, we start to get hurt. And it starts to come and it starts to affect our financial situation. And the biggest thing with credit is that the costs start to add up. So it's not easy. Past that, if you're looking for max funding, there are certain considerations that you need to understand. I'm going to show you a step-by-step process in order to verify whether or not you're eligible. Step number 1, get back to the basics. Clean up your credit reports. Verify that all the information is linear across all three bureaus. This includes Equifax, TransUnion, and Experian. Step number 2 is to make sure that you solidify your existing banking relationships. This essentially means is as you're cleaning up your personal credit profile, you need to start reaching out and start the creditors that you have good relationships with and say, hey, can I borrow some extended credit from you? Can I have more based on my positive payment history? And hopefully you have at least a good 12 months running with them. What this does is it improves your utilization rate, which is a good factor on your credit reporting. In addition to that, what you want to do is you want to make sure that they don't give you credit based on a hard inquiry. You can actually ask them, hey, based on my performance and history, can I have an opportunity where you have promotional offers and I can tap into those? Step number 3, you want to make sure you have at least a good 720 credit score. See, a lot of people out there will tell you, hey, if you have 680, that should be good. You should be good to go for funding. The issue is, how many of you guys are applying at the same time? How many 680s are there? So what you need to have is a little higher aim in order to qualify for the best amount of funding possible. You got to stand out. Step number 3, we need to verify with our existing institutions and those that are outside of us on whether it's the right thing to get vertical funding or horizontal funding. And the reason why I say that is because if you already have funding opportunities within the institutions that you're already doing business with, you might qualify for a lot more. See, contrary to the common belief that, hey, if you go back with your bank, they'll limit the amount of funds you can get. As long as you have good positive payment history with them, you're demonstrating your credit worthiness, and they feel that you can come back to them and leverage their credit system to benefit you and themselves, they'll be willing to work with you. So the way a horizontal acquisition works is basically horizontal means you're going outside of your financial institution. You're looking for opportunities that are outside, that are not common to you. Maybe new relationships with institutions like, for example, if you're a Citibank client, you might want to look into Chase, you might want to look into Wells Fargo. Those are some of the scenarios that you can explore. And a vertical acquisition essentially, or funding, is essentially when you're coming in and you're looking at existing financial credits that are available with your own bank, whether it be a personal loan, line of credit, different type of creative funding opportunities, and that's how you go in and tap into those resources. So you have to determine which one is right for you. Our final step is to understand your fundability score. So in another video, I demonstrated how you can calculate your fundability score. Right, there's so many different variations and factors, but the biggest thing you need to know is that you need to have a solid credit history. You need to make sure you have a good payment history. You have no late payments, your credit score is proper, and then you have an opportunity to verify your free cash flow. With that free cash flow, what happens is you're able to verify how much you can borrow on a maximum limit. Whatever extension of credit you have, whatever you borrow, with that verified credit, it allows you to calculate with the cash flow on what's a comfortable level that you can sustain yourself. So when it comes to funding, a lot of people make the mistake of going as much as they can in terms of borrowing as much as they can, but they'll make that mistake. It's important that you realize Funding is for a use that you can use to kind of move forward financially and not backwards. A lot of people carry bad debt with them. So bad debt doesn't necessarily give you financial outcomes in your future. What you want is good debt. And the way to calculate good debt is to verify if this debt is helping you in your financial condition move progressively forward with an outcome that's going to be greater than the debt amount past that point. If you feel that you're not able to calculate that, if you feel there's an unknown to that area, or you don't feel comfortable with it, then don't move forward with that debt. You want to be as comfortable as possible, and you want to be able to extract as much as credit as you can, so that when you do get it, it's actually progressive. Now, sometimes there are certain emergencies that happen. We can't do anything about that. So in those situations, if you don't have the funds, if you have decent credit and you leverage it, it's useful. But of course, the biggest goal is to always move forward progressively. So in order to move forward progressively, you got to find yourself and identify, okay, based on this max funding, whatever the amount that I want to get, how am I going to use it? What are some of the proprietary ways that I'm going to take advantage of this, right? So a lot of people who talk about my credit partnership program, the advantage of that is that we do business together. They don't have the headaches of understanding the credit and what is the essentials of preserving that credit, while we do the hard work and labor. The most important thing in that concept is to figure out, hey, when I work with individuals or myself when it comes to credit, when I get the funding, what's the next step that I'm taking? What are some of the things that are going to move me forward? That's why we call it progressive. And I think that you can realize how progressive it is if you see an outcome that's created that's, like I said, greater than the debt that you're borrowing. And that's what you should aspire to do and aim to obtain funding for those specific purposes. Now, a lot of people will get into real estate as well. They might want to do real estate. That's fine. But here's the thing, like, you need to start gaining some knowledge with that. So you got to start doing real estate without the involvement of your own money and study the markets. And I think that once you understand, okay, the markets are going there, you're exercising the knowledge, and you're observing key players in the real estate industry within your market, do certain things, getting involved with them at the beginning is an ideal thing. And once you're getting the experience and the knowledge, what you can do is you can branch up and do your own individual things. I'm not saying that you cannot do real estate on your own. It's just that you have to understand how to do it the right way. So I'd like to leave you guys with this, okay? Based on the information I shared with you, when it comes to getting funding, cleaning up your credit reports, maintaining good, strong financial relationships, understanding the side of horizontal and vertical financing, including with your own institutions and as well as the ones that are outside that you could tap into. There's other resources as bonus, like I'd like to include in this video, such as Fintech companies that are going out there and allowing you to borrow credit based on an algorithm that they put together, based on your income. Those type of companies also give some pretty decent lines of credit and funding. It's just that you have to be careful with the interest rates. They're in it for the money, but at the same time, they're allowing you to kind of tap into those funds if you need it the most. So I hope this video helped. I hope that you understand what are some of the steps that you need to take prior to funding. Once again, make sure your credit reports are good. Aim for the 720 credit score. Don't settle for 680. And of course, try to find your fundability score. See if you can sustain that debt. And if you can, try to move it forward on a progressive level to help yourself in your financial condition. Once again, this is your guide and mentor, Ali Tarafdar. I'll see you guys in the next video. If you're new, once again, if you haven't subscribe, turn that bell icon on. So once again, if there's a new video like this, you'll be first to be notified. If you found value in this video and you'd like to share some comments, leave it below and share this video with those that you feel would benefit from this. Once again, I'll see you guys next time. Bye for now.